Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index fell nearly 1% this week to 98.77, its lowest level in almost 3 months. The move followed the US Treasury's surprise decision to double long-term bond buybacks, helping pull 30-year yields sharply lower. Recent US and Japanese currency intervention has also pressured the dollar, while Treasury Secretary Bessent has called for broader access to Fed dollar liquidity. WTI crude is trading above $85 a barrel, supported by ongoing tensions in the Middle East. President Trump announced tougher sanctions on Iran and warned other countries against providing support. In the near term, oil prices remain highly sensitive to shipping flows through the Strait of Hormuz. Any diplomatic progress could reduce the geopolitical premium, while further escalation would keep volatility elevated. Spot gold is trading around $4,519 an ounce after surging more than 4% and reaching a 2-month high. Prices have broken above the 100-day moving average, supported by softer US economic data and lower Treasury yields. Despite a more hawkish tone from the Fed, markets still see limited near-term tightening risk, while easing long-term yields could provide further support for gold. Dollar yen recovered toward 158.9 during Thursday's Asian session after the previous day's sharp decline. Soft Japanese trade data, concerns over Japan's fiscal position, and the wide US-Japan interest rate gap continue to weigh on the yen. Because the yen remains a major global funding currency, its moves can also affect treasury yields, borrowing costs, and volatility across global asset markets. Euro-dollar eased slightly toward 1.1675 in early Asian trading after a strong rally in the previous session. However, downside may remain limited as weaker US economic data and softer inflation reduce expectations for further Fed tightening. Markets now price a lower probability of another US rate hike, while expectations that the European Central Bank could continue tightening are providing additional support for the euro.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.